cause they holding him down, holding him down. Let me get a countdown to 0. Baby, hella thick like syrup. Whisper in your ear, can you hear? Put the shiver down your spine, all up in your mind, can you feel it down? Copper whip, drop top, we gone. Body type, slim waist, pink thong. She the type of that will run up a chair, skip town. That's what she's on. Now, real bad, let me come over and see. Girl, you look really nice. Let you kiss all over me, cause I know, yeah, yeah. Hey, cause I'm on, yeah, yeah. Let you touch me real bad. Let me come over and see. Feel you look real nice. Let you kiss all over me, cause I know, yeah, yeah. Hey, cause I'm on, yeah, yeah. Let you touch me. Let me see you pop it, yeah. Shawty on fire, no stopping her. Shawty so bad, I gotta get her. She pays with rain, that fit her. Step right, she fierce, bad alert. She walk with style, and you got the picture. All about the back, figure she swerve. She pissed, I win, we laughing at you like. Shawty got a nice, put your down. Bitch, tried to play a game, but I found out. She all about the puppy, got the king crown. She the queen now, that's what I need now. See, I'ma get the brain, cause it's burnt. Better call the time of day, cause she got my heart. When she take away my breath, took it hella far. Took it hella hard. Yeah, real bad. Let me come over and see. Feel you look real nice. Let you kiss all over me, cause I know, yeah, yeah. Hey, cause I'm on, yeah. What's going on, guys? Just starting about 2 minutes. Just setting up, sorry. About to get it in. Put those notebooks out. You gotta calculate those JPY pairs. Kiss all over me, cause I know, yeah, yeah. Hey, cause I'm on, yeah, yeah. Let you touch me real bad. Let me come over. The way that you move in my body, can't nobody take it from me. You baby girl make me on it. I wanna make your body hot. I wanted to come rush your spots. Into this world, come with me. But every time I see your face, I'm wanting your body, yeah. Whispering, oh, you just wanted to be you and me, yeah. Listen now, baby girl, just want you to believe. It's wine on me, just wine on me. All right, guys, get those pens out. We're gonna start it. You wanna write this stuff down. Very important information. What's up, guys? What's going on? What's been going on? Hope you guys had a good day. The market was kind of volatile today, so we kind of laid off a little bit. Other than that, I hope you guys caught some pips, some that was out there. We'll get some better setups later today and tomorrow. In about another week, I believe. Next week is it's gonna be start of NFP week in 2 weeks. So NFP week is about 2 weeks. So we'll catch these pips before NFP week. But guys, welcome back. Let's talk about our pip count, okay? Let's go over some refreshing information and talk about the pip count. So our pip count, the fifth number from the decimal on regular forex pairs, the pip count. The fifth number is the pipette. All right, the fifth number is the pipette. So this red one is going to be your pipette. The fourth number from the decimal is going to be your pip. This is how we make money in the market, but this is also how we can lose money in the market. This number, every time this number moves up, we can make money or lose money. Every time it moves down, we can win money or lose money. All right, so that is our risk. Our fourth number from the decimal is our pip. So let's break down our pip count. Let's break it down. We have a pipette, a pip, 10 pips, 100 pips, 1,000 pips, 10,000 pips. So we have the pipette, the pip, 10 pips, 100 pips, 1,000 pips, 10,000 pips. That is the placement of your pip breakdown.
On the JPY pair, the third number from the decimal, all right? This is going to be GBP, JPY, AUD, JPY, anything that's attached to JPY, the third number from the decimal is going to be your pipette. So this 8 here, 145.778, sorry, 1.5, 145.778. This is going to be your pipette, the 8. The 7 is going to be your pip. The second number from the decimal is your pip. All right, it's going to be the pip. Now, let's write down these risk management formulas. Write down these risk management formulas. Now, this is coming from the TradingView tool, but also this is how you calculate your risk to reward in general. All right. This is how you calculate the risk to reward tool on TradingView, but this is how you calculate your risk to reward and your stop loss. Now, you want to get your number of pips and stop loss, and you want to get your number of pips and your take profit. Your formula for a sell, when you're selling the market, all right, when you're shorting the market, your formula to get your stop loss and pips is going to be your stop loss and subtract it from your entry. And that's going to give you the amount of pips you are willing to risk in the market. Your stop loss minus your entry. To get your take profit in the number of pips, to see how much money you will be rewarded in the market, you're going to take your entry and you're going to subtract it from your take profit. This will give you your reward or your take profit in pips. So again, your stop loss is going to be stop loss minus your entry, and your take profit is going to be your entry minus your take profit. Now for a buy, for your buy, it's going to be the opposite. Your take profit, to get your a buy, you're going to be long in the market. You're going to long in the market. You're buying the market. Your take profit is going to be the big number minus the little number. So your take profit minus the entry. You take your take profit, subtract it from your entry. This will give you the amount of pips or the reward you will get in the market. Your stop loss, to get your calculate your stop loss, you take your entry and you're going to subtract it from your stop loss. This will give you the pips or your risk in the market. This is very important because you don't want to be out there trying to guess your take profit and stop loss. All right, you don't want to risk. You don't want to go ahead and risk too much in the market. So these are your formulas. Give you a second to go ahead and write these down. Selling your buys. All right, so let's talk about our risk to reward. Our risk to reward. Now, to get our risk to reward, hold on. To get our risk to reward, let's pull down a little bit. Hold on, guys. Need to add another page for you guys. Add another page for you guys. Hold on real quick. You're going to use these formulas here. All right. Use these formulas here for your risk to reward formulas. Your risk to reward formulas are going to be as such. To find your max risk in dollars, you're going to take your account size and you're going to multiply it by the max risk percentage you're willing to risk in the market. Now, we encourage 2% risk on all trades. So you want to take your account size, whether it's $100, $400, $800, $8,000, all right? And you want to multiply it by 2% or by 3% or by 4%. Whatever your percentage you're willing to risk that day, that month, or that trade. All right, take the percentage. So your max risk in dollars is going to calculate from your account size times the max risk and your percentage. Your lot size, how do we calculate our lot size? You're going to take your max risk in dollars, all right, and you're going to divide it by the stop loss. You're going to divide it by a stop loss. Take your max risk in dollars and you're going to divide it by the stop loss. And this will give you your proper lot size. Make sure that when you get your lot size, you convert it from money into pips, to the pip lot, to lot size, from dollars to pips, all right? Make sure you calculate it from dollars to pips. Or sorry, from dollars to your lot size, all right? From dollars to lot size. So you're gonna have your pip count. Your lot size is gonna be in dollars. So lot size max risk in dollars divided by your stop loss. You're gonna get money. That's gonna be your max lot size in money. You're gonna have to convert that to a lot size. So if you have $20, all right, and 6 cents, $20 converted into a lot size is going to be 2 standards. If you have 21 cents, all right, convert it into a lot, it's going to be 0.02 lot size. Your risk to reward. To calculate your risk to reward, you're going to take your take profit and you're going to divide it by your stop loss. And this is going to give you a ratio, your risk to reward ratio. We always want at least a 2 ratio in the market. So write these formulas down. You will need these. Now your take profit. How we find our take profit? Now you have 2 options. You could take your lot size and multiply it by your take profit, or you could take your max risk. You could take your max risk in dollars, and you can multiply it by your take profit. It'll give you the same number. It'll give you how much money you will be rewarded in the market. It'll give you your take profit amount. Again, take your max risk in dollars, and you can multiply it by the take profit amount, or you take your lot size that you are going to be using and you multiply it by the take profit. All right. So let's go over to our risk to reward. Let's go over to our risk to reward. Come up here a little bit. Fix our pages. All right. So our risk to reward. Now we got to get our formula out. All right. We got to get our formula out. So our formula is stop or take profit divided by our stop loss. So I'm gonna give you guys a chance to go ahead and calculate these. It doesn't matter what order you do them in. I'll give you like 2 minutes and give you the numbers to the first one, the second one, third one, to the first, second, and third, and we'll do the last 2 together. All right. So give me the first, second, and third one. Give you about 2 minutes to do it. Real simple. Take profit divided by your stop loss. Just type your answers in the chat, guys. Type your answers in the chat.
Flow from my mind. Every single dollar grab, count the tag for my bentos, gotta be a sign. Looking at the screen one time. I get up at dawn 11, I'ma let it flow from my mind. Profits are easy, I got it, I want them. Got the pips on lock, cause I got it like that. I'ma make a band on top of GA, pop a lot, let it pull on my back. I'ma just pull up in the rain. I'ma just butterfly door in the lamp. I know that I paid away. All about the low, cause I do it for my fam. Pull up. On lock, cause I got it like that. I'ma make a band on top of GA, pop a lot, let it pull on my back. I'ma just pull up in the rain. I'ma just butterfly door in the lamp. I know that I paid away. All about the low, cause I do it for my fam.
All right, we got the answers. We got the answers. So let's go over these here. All right, so guys, we got the reward is 55. 55 is a reward. Your risk is 22. So we want to take 55 and divide it by 22. This is going to give us a risk to reward of 1 to 2.5. So our risk to reward will be 1 to 2.5. Our next one is 154 is our reward. So 154, our take profit. And our risk is 66, our stop loss. We're going to divide it and give us a 1 to 2.3. All right. Now our take profit again for this number here is going to be 320 pips, and we're going to divide it by 88 pips. Give us a 1 to 3.6. Our risk to reward here for 45 pips and 19 risk. So 45 pips divided by our stop loss. Our risk to reward is going to be a 1 to 2.3 again, 1 to 2.3. And our last one, our 48 divided by 33. You can almost do this in your head. It's going to be close to a 1 to 1, but 48 take profit divided by your stop loss. All right, give you a 1 to 1.4. Now these are all good ratios minus the one we have here. All right. Because we always want a 1 to 2, but being you're going to a 1 to 1 ratio, that is the minimum you want, a 1 to 1 minimum at minimum. All right, but we want to encourage that 1 to 2 ratio. We always want to double our profit. We want to risk 25 and get $50, or risk 75 and get 150. All right, So we want to make sure our risk to reward is at least 2. But these are the answers to your take profits, your risk to rewards. Now, let's calculate some pairs. All right, let's calculate some pairs. We have sell on USD JPY. We come to the market and we short the market. And this is going to be our entry, our take profit, and our stop loss. All right, our entry, our take profit, and stop loss. We need to find our take profit and stop loss and pips. We also need to find our risk to reward, our max risk in dollars, along with our lot size and our take profit. So in order to get this, all right, for our sell, we're going to do our entry, all right? Our entry is already given to us. Our take profit, we need to find the pips. So what is going to be our formula for a take profit on a sell? Take profit on a sell is going to be your entry minus your take profit. So let's take our entry minus the take profit. We have our entry, which is going to be 108. All right, 0.72. Because the second number from the decimal is the pip on a JPY pair. We don't want to add the 1 because that is the pipette. All right, so 108.72. All right, and we're going to subtract it from our take profit, 108.47. Again, the second number from the decimal is the pip. It's going to give us 0.25. Now, we need to convert this, all right, into a whole number. We got to convert this into a whole number. So how do we do this? Remember our pip count. We have the second pip from the decimal. So our second number from the decimal is our pip. So we have 1 pip, 10 pips, 100 pips. So what we need to do is we need to multiply this by 100 pips because it's in that place. It's in that place. Basic math gives us 25 take profit. All right, gives us 25 take profit. So therefore, our take profit is going to be 25. All right. Our take profit is going to be 25. So now we're going to do our stop loss. So what is our formula for the stop loss? The formula for the stop loss is going to be our stop loss minus the entry. All right, stop loss minus our entry. So we take our stop loss, 108.78, and subtract it from our take profit. All right, so sorry, from our entry. So stop loss minus entry is going to be our stop loss and pip. Stop loss minus entry, 108.72, 108.72. It's going to give us a 0.06. We need to convert this into our whole number. So we have 1 pip, 10 pips, 100 pips. So multiply it by 100 because it's in that place, gives us a 6 pip stop loss. Our 6 pip stop loss. So now we got to find our risk to reward. Our formula for the risk to reward is going to be our take profit and divided by our stop loss. So 25 divided by 6. It's going to give us 4.1. All right, a 1 to 4.1. I guess the 1 to 4.1. Now we have to do our max risk in dollars. We have to take our account size and we got to multiply it by our risk. All right, our percentage. That is our formula. Account size times the max risk in percentage. So $12,556. All right, and we're going to multiply by 2%. It's going to give us a total of $251.12. So $251.12. That's going to be our amount. Now we have to find our lot size. Our lot size, we could do our lot size $251, and we're going to divide it by 6 pips. So 251 and divided by 6 pips give us a $41.83. All right, so $41.83. Now we have to convert that into lot size, dollars into lots. So $41.83 in the chat. What is $41 per pip? What is $41 per pip in lot size? All right, gonna be 4 standards. So you got 4 standards. All right, you got 4 standards or 4.18 standards. All right, so 4 standards to be better. 4 standards is good. Still gives you your risk. So 4 standards, what is your lot size? 4 standards. So $41 or 4 standards. This is going to be your lot size. Now, what's going to be your take profit? You're going to take your lot size, all right, or your max risk in dollars, all right, and multiply it by 25. So you can take your 4 standards or $41, all right, and multiply by your take profit. So we do $41 multiplied by 25. All right, it's going to give us $1,025. $1,025. And that's how you're going to calculate your risk to rewards, your take profits, your stop loss, your max risk in dollars, every trade that you can take. Now, luckily, our trading view tool does this, but you know how to do this, all right? If you're on the fly, you're on the go, you know how to do this. We have apps for this, but in the event, you can show someone how to get their profits or how to get their risk to reward by these calculations. So I'm going to give you guys a chance to do the buy. The buy is real easy. Do the buy on CHF JPY. Give you like 2 minutes. Just put the numbers in the chats. And then once I see the numbers, we'll go ahead and answer them.
Little bag, hold back. Ooh, big bag, little bag, hold back. Ooh, big bag, little bag, hold back. Ooh, big bag, little bag, big bag, hold back. Big bag, little bag, hold back. Ooh, big bag, little bag, hold back. Ooh, big bag, little bag, hold back. Ooh, big bag, little bag, big bag. I just want a big bag. Call up the broker. Forget all the poses. Lamp is my motor. I'ma keep going. D-Lo is blowing. Lost in the mark. 4 steps on God. It be a soldier. All you gotta do is just follow the path. Let me set in your way. Yeah. Every single moment is paid. Perfected, selected today. Yeah. Get in the ride, let's fly. So I take profit inside. I'm grabbing what's mine. Hop into the Lord, let's ride. Getting this money.
I was going these problems here. We got CHF JPY for a buy. All right. So what is our formula? Our formula is going to be take profit. All right, minus our entry. Basic math, the big number minus the little number. So take profit minus our entry. So our take profit is going to be 116.27, and we're going to subtract it from our entry, 116.17. All right, because the second number from the decimal is our pip. Going to give us a total of 0.1. We have 1 pip, 10 pips. Multiplied by 10 gives us our 10 pips. Will give us 10 pips. So 10 pips. So take profit is going to be 10 pips. All right, now what is our formula for our stop loss? Our formula for a stop loss on a buy is going to be our entry minus stop loss. So entry minus our stop loss, you can almost do this in your head. All right, 116.17. All right, 116.17, and we're subtracted by, 116.17, and subtract it from 116.15 because the third number from the decimal is the pip, and the second number from the decimal is, third number is the pipette, second number is the pip. Going to give us a total of 0.02. We have 1 pip, 10 pips, 100 pips, multiplied by 100, because it's in that place, gives us 2 pips. All right, so we have 2 pip stop loss. Sniper entry. Our risk to reward, all right, 10 divided by 2, which is going to be a ratio of 1 to 5. All right, a 1 to 5 ratio. 1 to 5 ratio, 10 divided by 2. That's a great ratio. So now we have a max risk in dollars. We have to find our max risk. What are we willing to risk on this sniper entry here? All right, so we have an account size of $2,115, and we have a 3% risk. So let's take our formula account size times the max risk. And what does it give us? 21115 multiplied by 3%. It'll give us $63.45. All right, that's our max risk in dollars. $63.45. Now, What is our lot size going to be? Our lot size, we have to take it, our max risk in dollars, and divide it by our stop loss. $63 right there, and divided by your stop loss. Be $31.50. Now, $31.50, we need to go ahead and convert it into a lot size. Our lot size for this could be 3.15 standards or 3 standards. All right, so 31.50 is going to be your amount. $31.50 per pip or 3 standards. It could be 3 standards. Now, what is our take profit going to be? Now, you could take your lot size and multiply it by your take profit, or you could take your your lot size in dollars and multiply it by your take profit. Either one is good. So basic math here, $31.50 multiplied by 10 pips gives us $315. So we'll earn $315 is based off that sniper entry, 315 bucks. Now, these are for JPY pairs. Very important to calculate these because if you add the pipette, you're going to get an off number. All right, you're going to get an off number, and it will mess up your lot size. And these are proper lot sizes based off these accounts, because if you are risking a 3 standards, all right, if you got this account size, you have 3 standards, you're not over leveraging because you only have 2 pips. All right, you're only losing 2 pips. All right, you're risking $63.45 in the market based off this account size. So your 3 standards sounds very high, but your lot size matches the risk to reward. All right, your lot size matches the risk to reward. Now we'll go over our last one, our regular forex pair, major pair, GBP USD. Now our buy formula stays the same. Nothing changes. We just know the 5th number from the decimals, the pipette, and the 4th number is the pip. And we want to make our money based off the pip. So what is our formula for our take profit? It's going to be take profit minus your entry. So our take profit minus entry is going to be 1.3703. All right, 4th number is the pip. We're going to subtract it from our entry, 1.3691. 4th number is the pip. It gives us a total of 0.0012. We must convert this into pips. All right, so we have 1 pip, 10 pips, 100 pips, 1,000 pips, 10,000 pips. So we multiply that by 10,000. Going to give us a 12 pip take profit. All right, 12 pip take profit, 12 pips. Now our stop loss formula for a buy when we're long in the market, it's going to be entry minus our stop loss. Real simple, basic math. Entry minus stop loss, big number minus little number. 1.3691, and we're going to subtract it by 1.3684. Gives us a total of 0.0007. Put that into pips. All right, we got 1 pip, 10 pips, 100 pips, 1,000, 10,000. Multiply by 10,000 because that's in that place. Gives us a 7 pip stop loss. So now we have a 7 pip stop loss. Our risk to reward must be pretty good, but we know we can almost do this in our head, all right? Because this is close to a 1-to-1. So let's go ahead and do it. Our take profit is going to be 12, and we're going to divide it by our stop loss. Give us our ratio, 7. So we have 1 to 1.7, 1 to 1.7. All right, that's an okay ratio, close to a 1-to-2, just close to it. All right, we can take that trade, be good to go. So we have a risk to reward of 1 to 1.7. Now, look at these numbers beyond. Don't add these extra numbers onto your risk to reward because, again, it will mess your stop loss up. Now, if you put this 1 to 0.71, make sure you get your proper lot size, okay? But keep this number as a 1 to 1.7 or a close to a 1-to-1 ratio, all right? You don't want to round this number. If this is 1.7.5, you don't want to round it to 1.8. If it's 1.719, you don't want to round it to 1.8. Keep it at 1 to 1.7. All right, so let's find our max risk in dollars. We have $708 account, and we're risking 4%. All right, we're feeling good in the market. We want to risk 4%. Okay, cool. You know your risk. So you have $708 and multiply it by 4%. Going to give us $28.32 that we want to risk in the market on this $700 account. $28.32. So So now that we have our risk, our max risk on this account, all right, we have to find our lot size. So we're going to take $28 and divide it by our stop loss, which is 7. 28 divided by our stop loss, which is 7, is going to be a 4. All right, what is 4? Sorry, 28.32 divided by 7. All right, so that's $4.04, or what is $4? All right, $4.04, or what is $4 converted into your lot size? Okay, convert it into your lot size. Now you're going to be 0.40. All right, $4 per pip. $4 per pip calculates to 0.40 lots. So 0.40. So you have $4 or 0.40 lots. That's going to give you your lot size. That's the proper lot size on this account for this risk to reward. Okay. Now, what is your profit? Again, you can take your lot size and multiply it by your take profit, or you take your lot size in dollars, convert it to dollars, and multiply it by the take profit. So let's do it. Let's do your $4 multiply it by 12. Sorry, $28. Sorry, $4 multiplied by 12. There we go. All right, they give us $48. Okay, $48. $48 is going to be what you're going to make in the market based off this small account or this risk to reward. All right, this is what you want to do, guys. If you don't have it, the risk to reward tool up all the time, or you have something on your phone like an app, like Nash, like there's Nash and there's other calculate lot size, MyFX books. You could use those to calculate your lots on the fly. But if you wanted to do it by hand, here you go. This is how you do it. But this is how you do proper risk management. All right, don't go in the market without proper risk management, because once you risk over once you risk about 6 or 7% of your account, you're looking to blow your account. All right, that's called get rich quick. We want to risk no more than 2%, at max 3%. Okay. You guys have any questions on this? Any questions? All right, guys, if you have no questions, I appreciate it. All right, I definitely appreciate you guys being on. All right, if not, no questions, I'll see you guys tomorrow. All right, and we have Hawaii boot camp tomorrow, going over the same thing, proper risk management. All right, we'll get them caught up and everything. I appreciate you guys being on. Enjoy your night. Looking for more and better trade setups. Looking forward for London. All right, hopefully the market pushes a little bit. I appreciate you guys and enjoy your night.
About to take it off in the nighttime. Shot it in the bag and an accent. I'm driving on fours, about to cop a pin. Profits on super like a Clark Kent. Yeah, shout out to you, low, gotta represent. From 6 in the morning, I'ma keep coming, I'ma keep going.
Thank you. Y'all be good.